And it's February the 9th, 2023, right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. Let's kick off with the markets now. We see oil prices struggled for traction today. We see Brent crude futures gain about 5 cents to $85.13 a barrel in early trade, while US WTI crude futures had actually about 2 cents to $78.45 a barrel. Both benchmarks have gained more than 6% so far this week. So it's looking like it might be a positive week for the oil prices this week. But we're looking out for what's driving sentiment later on the show. And now for edible oil markets, now we see Malaysian palm oil futures rose to a one-month closing high as investors awaited key monthly data amid concerns of tightening supply from top producer Indonesia. The benchmark palm oil contract, the FCP OC3 for April delivery on the Bursa Malaysia Derivative Exchange rose by 59 ringgit to $930 a ton. That's its third consecutive day climb. Indonesia will review its palm oil export quota ratios amid rising prices of domestic cooking oil, raising fears that Jakarta would further limit its exports. And that's about 1 day to the February 10th deadline extension by the Central Bank of Nigeria to stop the old 1,500 and 200 Naira notes from being legal tender. Meanwhile, we still have the Supreme Court yesterday temporarily halting the move by the federal government to ban the use of the old Naira notes from February 10th, 2023 by a 7-member panel led by Justice Okoro, who halted the move of the federal government in a ruling in an ex parte application brought by 3 northern states of Kaduna, Kogi, and Zamfara. So far right now, we don't know whether to be excited by this. We did get a reaction from CPB. He said that he lauded the move by these governors, but at the same time we have the AGF there appealing this ruling. So countdown to tomorrow. We'll see what happens next. We're looking out for reactions from the central bank, although there's some chatter right now that the Central Bank of Nigeria says it's not binding, but we'll be waiting for an official statement to that regard. But remember, you can send us your experiences so far at businessmorning@channelstv.com. Meanwhile, as the current scarcity of the Naira notes continue to take its toll across various parts of the country, bank customers in Lagos metropolis have expressed their reactions to the impact it's had on their livelihood. This report takes a look at the challenges faced by some Nigerians. It's barely 1 day before the February 10th deadline issued by the Central Bank of Nigeria, phasing out those notes. We'll be looking out for how customers are reacting to this. Take a listen.
It's less than 48 hours to the end of the extended deadline by the Central Bank of Nigeria for the validity of the old higher denominations of the country's currency. But right here, some bank customers are finding it difficult to withdraw money from the automatic teller machines after waiting for several hours in queues from various banks. Some even to the point of exhaustion. While some bank customers were unable to get cash from the ATM, others are lucky to receive the lower denominations at one of the banks with available cash.
3,000 Naira on the counter, which is 5 Naira, 20 Naira. This is it. I've been standing here for the past 2 hours, and I've not actually found it funny to get either the old notes or the new notes. Even with the POS standing, I've almost been to 4 banks, and I've been to like 4 POS stands. It has not been easy getting the old notes and the new notes.
I was lodged in a hotel. I couldn't pay the manager because of the situation, and I feel weak, distressed, sick because I don't know where where money will come in.
However, some bank customers were delighted to withdraw a substantial amount of cash dispensed from the ATM of one of the new generation banks.
The ATMs are not dispensing cash. Then at the counter, if you go inside the bank, if you are a account holder there, if you go inside the bank, like some banks are giving 3,000, some are generous to give us 5,000. But only one of these banks, like where we are standing here, at the ATM, you can get, if you have an account there, you can get 20,000. And if you go in as an account holder, you can get 20,000 at the counter. But it's only that the crowd here is overwhelming. The day before yesterday, I was here, somebody's number was 670 something. So we were here tonight, but they've organized it so well for us that if you are patient enough, you can get money.
Meanwhile, with the order on Wednesday by the Supreme Court calling for the suspension of the CBN's deadline for swapping of the old to new Naira notes, it is expected that the current tension it has caused will disappear in days to come.
Not an easy time for bank holders right now. So, well, the financial inclusion drive in rural areas of Nigeria must be definitely taking a hit right now with the cash scarcity. But let's find out how super agents are managing in the rural areas this time. Let's talk to Mr. Fashashi Sarafuddin Atanda, Managing Director, Ecosystem Network, join us right here in the studio. Good morning. Great to have you.
Yeah, good morning.
So, yeah, we did get that Supreme Court order yesterday. What's your reaction to that? Were you excited when you heard that?
Yeah, it was a great judgment in support of a dying economy in the face of, sovereignty of the masses. So it's indeed a wonderful judgment, though it is not as crucial as access to Naira. Because the case at the court was about the hold notes. Should this still remain in circulation, or should it, be retrieved finally? But unfortunately, the problem Nigerians are facing is not about the new or the hold Naira. It's about the scarcity of the Naira itself. Whether it is hold, whether it is new, they are not accessible, they are not available, because they have already deposited all their cash, the hold notes. So, assuming this kind of case had actually came earlier than this time, when they still had the hold notes, it should have been jubilation around the country.
So right now it's not jubilation?
It is actually, because even without that case, without that judgment, the bank will continue to accept the whole Naira and change it for the new.
And definitely we're all expecting, eagerly what the CBN is going to say about as a reaction to this. But what are you expecting?
Quite all right. There is nothing bad from CBN admitting the fact that this policy has actually backfired because it actually failed all the logical indices. A policy that has killed over 1.2 million agents, network in Nigeria, built over 10 years. So within a week, all the agent locations are shut down. So, and a lot of implications on this. And I am sure that it's not going to be bad for CBN to just give reason to logic and come back to the side of the, reasoning. Because what we are trying to do is, we are not just trying to redesign or change Naira. We are also trying to move everybody to cashless environment, which can never be done all of a sudden, because Nigerians is still a very rich cash economy. So, and for you to move from a cashless, from a cash economy like ours, to a cashless economy, then it takes a lot of time, and it's not only the sole responsibility of the Central Bank of Nigeria, because cashless, economy will ride on internet penetration. As of today, we are less than 40% internet access in the country. So, and we are also looking at, it's going to ride on, poverty level. Today, more than 60% of Nigerians, about 133 million, are below the poverty line. So that means even the data is not affordable where we have the data. And that is why the rural people that we are talking about, if you observe their livelihood today, they are only recharging about 50 MB of data. And in most of the part of the day, they switch it off and switch it on. So they are not actually ready. So internet access is not even affordable as of today.
I'm talking about internet access. You know, obviously, we know the super agents, you know, they've been deployed to the rural areas. How, can you paint a picture of what it's been like, really, for these agents?
The fundamental truth is the rural economy has been shattered by this policy because all our village markets are down, because there are no other means of payments available to them. The agents that are supposed to be servicing them, prior to this period, the percentage of agents in rural area compared to those in the cities are very wide because of profitability, because rural presence are not incentivized. As agent network manager, we have shut down over 90% of our agent location before this time from the rural area due to, one, the challenge of the cost management, the cost to serve. A typical rural environment terrain in Nigeria, for you to get a cash backup from the bank, you have to travel over 200 or 300 kilometers. So you have to spend close to 5,000 naira on transportation. And your man-hour, you're going to spend it because the banks will not say because you are an agent and treat you preferentially. You still have to go and queue on the line. So there are a lot of things that are wrong with our payment system, which we are supposed to put in place before we now say, oh, we are ready for cashless economy. Quite all right, we are not ready for cashless economy, and CBN is also not ready for cashless economy.
Let me throw you back a bit now. Say maybe the first half of 2022. Okay. Were there any indications, you know, whatsoever that this would happen?
Even as at a few months ago, there was no indication that this will happen. I was privy to be a member of the Financial Inclusion Steering Committee of the Central Bank of Nigeria. We have never discussed this. Industry-wide, they never saw this. CBN are still licensing super agents. They are still deploying licensing as at a few months ago. And I'm sure from all the indication that this was also not part of their master plan for this year. We didn't know where this actually emanated from. For confirmation of that, when this process started, CBN has issued about 4 memos on this activity. That is to tell you that they are not prepared. For the first memo, you look at it, they want to do cash swap with only commercial banks that are no more than 21. Commercial banks with a few thousands of branches nationwide. We want to use that to mop out over 2.7 trillion. It's not logical. So the first memo was not even looking at any other channel than the commercial bank. And the fintech has taken away banking from the core banking. So the fintech has been excluded. So immediately they got that. We called their attention to it at the level, because there is an association of mobile money and bank agents called AMBAN. We sought for their audience and we advised them that you need to now include agent network, because these are the windows to the rural areas. So include them. That is when CBN went back to go and revise that policy, a review policy on cash swap. And we were not called again to the round table to say, what is the implementation plan? They said, oh, we got the idea of using agent network. So they recruited about 30,000 agents out of the 1.4 million agents. So, and they deployed them to rural location, which is outside their terrain. A lot of them, because they only asked the super agent, the licensed super agent, to submit the list of agents they can use for cash swap. And the providers, they only use activity rate of agents. And the rural areas, they are not active. They are only servicing. So CBN missed it. So you now have to move somebody from Bida, a town in Niger State, to Agai, where it is not its terrain. So, and CBN also underestimates the rural transactions, thinking that they place a limit of 10,000 naira.
How big are the transactions in the rural economy?
Okay, the rural economy is one of the biggest in terms of transaction pool. So we can get this fact from the fast-moving consumer goods companies in Nigeria. Where are they consuming larger part of their, of their goods, the rural areas? And it's one of the reasons why the former banking system has not been able to capture the rural area in terms of financial inclusion, because we are also assumed that they are poor. We assume that their turnover is low, so we place them on an account that is 50,000 naira limit, that can only take 50,000 naira limit. And whereas a local farmer who is having a 7 ton of maize, a maize is about 250,000 naira today. Somebody with 7 ton, you are talking about, a whole lot of money, 1.4 million. And that is the kind of person you are limiting to 50,000 naira transaction a day. And because of that, the adoption of, account opening is really not flying with them. A rural farmer, how much is a cattle today? A smallest cattle will cost you around 300 or 400,000 naira. That is, and you have a rural farmer that is controlling about 10, about 15. So it's not poor in that sense. So the turnover in the rural areas is because we don't have an avenue to capture their transactions.
So I guess we have to change our mindset towards that.
We really need to change it. We really need to change.
What would you like to see, going forward, talking about policies now, to actually boost that rural economy and ease the issues with the super agents at this point?
Okay, fantastic. That is why we need to think before we act. Not that we would have experimented with the life of Nigerians, because what is happening currently is like we are just experimenting. Maybe this will work and that will work, and it's not working, and people are dying, people are suffering. So we would have, sat down at we are blessed in this country. The highest industry that has attracted the largest investments in Africa is into financial technology, fintech. And Nigeria, those funds landed, the large parts of it landed in Nigeria. So that tells you that there is something special about Nigeria. So in the fintech space. So today, we don't actually need to destroy the sinks. We have destroyed the sinks. So what we need to do now is to go back to the status quo that, we are going to have a 5-year or 10-year plan, master plan, to go from a cash society to a cashless society. What do we need to do? We need to now use that opportunity to develop our payment system. Because today, why are people not, accepting digital platform? Because they don't have trust in it. What is causing that mistrust? If you do a transfer today, you may not receive that confirmation until several hours. So instant transactions have turned into hours transaction. And a typical trader who wants to jump into another bus cannot wait for that confirmation. So now if there are disputes today, there are no automated reversal mechanism in our payment system. So you still have to go to the bank to go and lodge a complaint. So a typical trader will he abandon his business and move to the bank?
That's the experience in the rural areas.
Even in you see people fighting at the ATM. It shouldn't be worse like what we are seeing in the city.
Because of the pressure we're seeing, right now.
You understand. So we have a lot. We need time to develop our payment system. We need time to now build and migrate people, to start. Okay, we launch alternative payment channel, Naira. We launch QR codes. We launched all this several years ago.
There's nobody using the Naira.
No, it's not that nobody is using. The level of activities on it are not at what you have in POS, for example, which is a physical channel. So a right-thinking person will go and find out and research into it that, why is it that people are not accepting other alternative channel? What are the challenges? How do we solve those problems? So these are the questions that we need to really ask. And let us take instances of the countries that have achieved high level of financial inclusion and digital transaction. If you go to maybe Nairobi today, even a filling station, we ask you that, no, there is no cash. That is my M-Pesa number. You transfer to it. But here, you see the other side. A filling station in the city will be telling you that I don't want transfer and my POS is not working. Because they are afraid that if there is any problem there, then there is nobody to solve their issue. Let us have a 5-year plan. In Rwanda, there was it was a decision that we want to move, we want to journey. There was no that decision here. So the first thing Rwanda did was to lay cables, because they know that cashless economy will ride on the internet infrastructure. When they got in the following 5 years, they got to that level, they now started migrating, not an emergency policy. Not that, oh, but I think we are used to fire brigade approach in Nigeria. We remember the issue of NIN. Nobody is hearing anything about it again, because it has been used to do what we call a window shop, a video show. You know, we are done. It's a cash cow, you understand? But the NIN itself is meant to create a digital identity, so that as I'm coming into your studio today, you don't need to ask me of anything. They must have shared that database with you. You get my NIN, you get everything from me. But in Nigeria, we reached 90 million enrollments, and we started celebrating. Instead of move to the next level of sharing that database.
We shouldn't be sharing yet.
Yeah, so that, you know, today, you know, you lodge into the hotel, you don't need anything than your NIN. So that is what they call digital economy. Not our own, you know, our own is more of deceitful, you know, policies.
And we'll be looking out for the deadline tomorrow. We'll see what the next step will be.
The fundamental question is, the deadline will have no meaning. Reason is, there are no cash to even deposit. You know, assuming, oh, we have money in the bank, we have this at home, then people can be afraid of, oh, I need to go and run. But they have, you know, I was listening to one of a rural woman. He said, it's like we have been scammed. I said, how? We're promised, our leaders promised us to bring our old money, that they're going to change it into a new currency. And we believe in them, we trusted them, and we, you know, deposited all our funds. And today, we can no longer access, you know, even a fraction of our
going forward, you know, I hope we're able to sort this issue out as soon as possible, so that we don't grind the economy to a halt. But I want to thank you. We'll have to leave it there now. I want to thank you so much.
Thank you very much.
Mr. Sarafuddin Atanda, Managing Director, Ecosystem Network. It was great having your perspective.
Thank you. It's a pleasure having you. Thank you.
All right, so we'll take a break now. When we come back, Commodities market update is next. Do stay with us. This is Business Morning. Welcome back now for Commodities market update. Now, see, annual inflation in Nigeria dipped in December 2022. Saw that decline there about 21.34% after 10 straight monthly increase. But what can we expect in January? That's the question now. Joining us is Oluwatomi Maiwa, analyst, financial derivatives company. Join us via Zoom. Great to have you.
Thank you very much, Ladi, for having me.
So, Toby, definitely January was a very challenging month, you know, with the Naira swap, fuel queues, and it looks like inflation will tick up again. Break down your expectations.
Yeah, typically, coming from December, a month where the festive period usually, you know, help to boost demand, and then January, where all of those things are, you know, reduced. So typically, we should see inflation actually decline, of which we even saw the other way around in December, because typically demand would actually increase during the festive period. But, you know, we are in unusual times right now, and considering the fuel scarcity, you know, that will lead to increased transportation costs, the cash squeeze, you know, and that situation, you know, should lead to a decline in demand, because normally, because nobody really, you know, you don't have the money to, you know, go to the market to buy something. So theoretically, we should see demand, you know, fall. But when we move, when we look further into the nature of the good, you know, goods in terms of, you know, looking at elastic goods and goods that are, you know, perishable and inelastic. When I mean elastic, that means talking about the price, the demand for that particular good, you know, responds more to, that's for elastic, respond more to prices. And then for inelastic, the demand for that good, you know, respond less to price changes. But, you know, because for inelastic good, it is, you know, quite easy to pass cost to consumers, because, you know, it's you have to just buy it. For example, rice, for example, beans and all of that. So because it's easy for them to pass the cost to consumers, irrespective of the cash squeeze, we still saw an increase in all of those commodities. But why for perishable goods like tomatoes, for this pepper and all of that, we saw that that's the price declined because you just have to sell the product before they start to get spoiled, and considering the cash squeeze in the system. So all of those things we saw that this would actually lead to an increase in inflation rates, coupled with the fuel scarcity and the increase in transportation costs. So we're projecting about 21.42% in January.
21.42, and obviously we know central bankers globally, they've been echoing the same thing. If inflation ticks up, they will take rates even higher. And obviously, everyone's going through a lot right now. What are you seeing for MPC policy going forward? And is a rate hike really what we need right now?
Well, let me say there are a lot of uncertainties in the air right now, and it's not quite clear what the CBN will be doing, the MPC will be doing I think the next meeting they'll be having will be March, because one, T-bill rates, which should always move in tandem with the monetary policy rates. We saw that after the meeting, the rates fell, there was that divergence, right? So it's at the moment things are still quite unclear. So what we think should happen in the short term is the fact that T-bill rates would increase further. So once T-bill rates increase further, I would see that it will help to mop up liquidity in the system. So basically, it's about bringing the effective rates, to the monetary policy rate. That means raising the T-bill rate to reflect, the tightening stance of the CBN. So I think that's what we're going to see in the short term. But for the MPC meeting, there's still a lot of uncertainties right now. So there's only little we can say at the moment, but we don't see them. We don't see anything at the moment.
And obviously, with other economies, there are parameters they measure to see the impact of the previous rate hikes. Well, what do we have here in Nigeria to say, okay, we're seeing the impact, of the 600 basis points we've done already? Like, what parameters are there to measure here?
Well, I can say, first of all, the nature of inflation, inflationary pressure is mainly cost push. So it's although there's a demand pull aspect, but compared to the cost push side, I think that's where that's the nature of the inflation rate, and that's why even in sub-Saharan Africa, we've seen that even though global inflation is slowing, but in sub-Saharan Africa, we've seen that inflation has been tapering, at a slower pace compared to the global economy because of the structural problems that are attached to inflation in sub-Saharan Africa. So basically, I think one of the issues in Nigeria is the structural problems that is attached to the inflation problems. For example, the fuel scarcity, the increase in transportation costs, then the depreciation of the Naira. Definitely, and like I said the last time I was here, I said that manufacturers are now pricing their products, with what they see in the parallel market, because they are no more receiving as much as they used to do as our last 2 years ago, that 2021. So it's been quite difficult. So that's why there's that divergence from the global trend to some extent. So I think that's why we're still seeing that pressure in the economy.
All right, let's look at the oil market, because I know that contributes to inflation globally. What are we seeing there? We've seen a price increase for the week. There's a positive right now talking about the prices, but how are you seeing it right now? What's driving sentiment? What can we expect for next week?
Well, like I said the last time, that there's a long-run outlook for oil, which relatively stands about the demand for from China, considering the fact that there's an elimination of their zero COVID policy, and their demand or their GDP growth is expected to rise to about 5% from about 3% last year. So there's that optimism in the market, even though considering that we expect activities to slow in the US. I think recently they've been having increased inventories of their reserves. So that's actually to some extent supporting the bearish sentiment in the market. But, as usual, but that's why I said the long run is still on the improved demand from China, although because considering the fact that China is the second largest economy. So that on the long run is helping to support prices, crude oil price around $80 per barrel. And so that's what we're going to see going forward.
And obviously, we're still seeing that volatility with LNG in the global market. Are we still going to stay down, with those prices?
Yeah, let me say for now, there's no cause for alarm because there's been less depletion on the inventories for gas. Considering the fact that the weather has not been so bad as as earlier predicted, and the fact that the alternatives of the European countries are actually sourcing for gas from alternative places. So and the price of gas at the moment, or natural gas at the moment, is actually far below what it was even at the start of the war. So right now there's no cause for alarm, and that's why we're still going to see the price of gas, stay around $2 per MMBTU to around 2.5, 2.6. So on the short term, that's what we're going to see.
Oh, it's quite incredible that LNG was trading above close to about $10 sometime, and yes, most of these prices have come so low at this time. But it is good news, for the inflation story.
Let me say it's good news for them for European countries because that's always a major stopping factor for inflation. But and it's bad news for Nigeria because it's constitute about 14% of our total exports, and so that would actually reduce our external earnings, and definitely we'll see the pressure on the Naira at the end of the day. And also for although that shortfall might be covered by the higher oil price, but at the end of the day, it's what our oil production is. It's not up to total, not up to what the OPEC quota is, and so it's
bad for earnings. Bad for earnings, yeah. Good for inflation. Yeah. All right, thank you so much. That was Oluwatomi giving us the details from the Commodities Market Analyst, Financial Derivatives Company. Thank you so much.
Thank you very much.
All right, now let's take a look at what's happening with the markets. Obviously, we see some movement in that market at this time, talking about the local bourse, but I'm sure investors are still looking out for ways to make profit, even though it's an election month, and we know how the elections impact the markets. Let's bring out Anita now to give us the updates. Anita, good morning. Great to have you.
Good morning, Ladi. Yeah. Okay, so midweek trading session, we made a very, let me say, just like a moderate rebound, almost a 0.25%. And don't get it
not convincing then.
Yes. Actually, the market it should have closed in the red because you had profit taking affecting 23 stocks, while only 11 gained, and the gains were just characterized by just some low cap, if I may call them low cap. But the miracle was done by Dangote Cement. A day before that, it was Dangote Cement that led the market to close in the red. But at the same time, it did that miracle. It was up by 1.89%. So that was what brought the market back to life.
Even though it was a negative market breadth. Right?
Yes, a very widely negative market breadth. Okay, so now I'll be giving you that detail just in a couple of seconds from now. So now, Wednesday midweek trading session, it's back in the green for the market. As you can see on the board there, almost a 0.25% rebound for the market, 54,427.05%, as you can see. And then for the market, in terms of the gains is more than 69 billion naira, and we are still in that 29 trillion naira level where we're counting down to whether the market will be able to cross into the 30 trillion naira level, the first time ever on the NGX. So now that gain we saw is largely due to Dangote Cement as well as Zenith Bank, which also was able to counter the losses from three other tier 2 lenders, the likes of GT Bank, the likes of Access Bank, the likes of UBA. So they were in the red, but we saw that 0.80% gain from Zenith Bank, able to counter that. So quite an interesting activity for midweek Wednesday, 0.39%, that's for the banking counter, while the industrial goods counter, almost 1%, 0.94%. For the oil and gas sector, it was unchanged. Earlier this week, we had this news that Adova has plans to delist from the Nigerian exchange. This comes after a core investor has made a very huge amount of offer to buy the company. So we'll be talking to our analysts to give us more details about that as we proceed. Now, for the activity chart, as you can see there, the activity chart, volume of activity was down by 24.2%. What you see, in contrast to what you had on Tuesday, 151.58 million units of shares is what was traded, in contrast to what you had on Tuesday. Value was also down 1.81%. For the deals, just nearly 3,000, but still lower than what you had for Wednesday. So now let's flip over to the other side of the market, the unlisted securities market. It's another point of decline for that market. It was down by 0.34%, in contrast to what you had another decline, which was on Tuesday, which was down by 0.81%. But for the board, what you see there, that market is gradually going below the 700 points. In terms of volume of trade, it was up by more than 9,000%, while the market recorded one gainer and three losers. As we can see on the board there, we had the likes of Capital Bank Core, which was the top gainer there. The NSD, where the market is being traded, was top among three losers, while Capital Bank Core again was the top trade in terms of the securities traded there. Now, to give us more details for the NGX market, let's talk to Richard Akimolodu, who is a stockbroker at CSL Securities Limited. Thank you for joining us, Richard.
Good morning, Anita. Thanks for having me on your show.
Well, now the market has been able to stage a very quick comeback for midweek, just when you thought that maybe investors would continue to take advantage of losses. Yes, we did see the impact of profit taking, 23 losers against 11 gainers. Now, can you tell us more about this, as well as what's happening to the shares of Adova, we didn't trade yesterday?
Okay, thank you, Anita, for that question. So, if you look at the week, we've been seeing like a seesaw movement in the markets. On Monday, the market witnessed a slight gain, and we saw a dip on Tuesday, and another slight gain yesterday. As you know, that we are in earnings season, and investors are just trying to cherry pick and try to position for themselves for dividend payments. We begin to see area of result coming in from the banking, consumer goods, and industrial. This morning, as I'm talking to you, we just received a result from Presco, and I believe investors are trying to digest that. And equally, the market is expecting the result, though we've seen some result from tier 2 banks at the like of Fidelity and FCMB. But we are yet to see those, the one from tier 1 banks, which are the one that pay most of the dividend, the like of Zenith, GT. But we continue to see like gain on these names, where the tier 1 banking names, as investors believe they are going to pay the usual dividend that they used to pay. So what we've seen in the market is we've seen cautious approach by investors in dealing with the market. And I think it is important to know that yesterday there was an auction, NTB auction, and we saw rates going down significantly, 364 days at 2.24%, because there's a lot of liquidity in the market. And we believe that some of these funds might find their way into the equity space, because you can get a better yield from the equity space compared to what we are seeing in the...
No, okay, so Richard...
because the yield are too low at the money markets section. Okay, you understand what I'm saying?
Yes. Okay. So now, Richard. So now, with that being said, and yesterday at the primary market auction, which was our investors, the participants in the fixed income space, had their eyes there. So now, do you see the investors in the equities market tilting towards the fixed income market? So, and then maybe what do you expect for the market's close at the equities for equities today?
So, as I'm talking to you now, the market is flat. As I've said, that investors are very cautious in terms of entering the market. At least price is, you must look at the dividend yield, because if you look at the historical dividend payment of some of these names, so you have to factor into the price at which you are coming into this stock. To answer the question you asked the last time about Adova, so this week on Tuesday, to be precise, we saw a notification from the company that's the parent company, that's Ignite Investment and Commodities Limited, which hold presently 74% of shareholding of the company. They are offering to acquire, to buy the other shareholders out of the market, out of the company, and actually taking the company from NGS. That actually they are looking at delisting the market, but these they have to seek approval from the regulators, and before the trial can be concluded. They are looking at buying the shareholder at 1738, and immediately that news came into the market, we saw the share price of Adova nose diving. It lost about 4% yesterday, trading at as low as 1690. So that's what the information we are having concerning Adova.
Okay, thank you so much, Richard, for that information. And as usual, our eyes are always on all the markets. So that was Richard Akimoladu, stockbroker at CSL Securities Limited. So, Ladi, it's quite an interesting time for the markets. Yeah. Just when you think maybe it's going to sustain, you just might know which side it might decide to tilt to.
And it's quite incredible the market is where it is today with all the, uncertainties.
Yes. I must tell you, I'm surprised about the market's performance, because year to date is still in the positive territory, 6.20%, and it's just about how many days since the new year started?
Right, quite interesting. Yeah. All right, we'll see how it plays out. It's an election month.
Yes.
And obviously we hope for more gains. Investors, definitely. Thank you so much, Anita. That was Anita there giving us the details for the markets. Now, let's head on to the UK. Now we have Juliana standing by right there. Obviously, it's layoff, the drums of layoff still ringing loud in 2023, and now it's Disney expecting to cut about 7,000 jobs. What are you hearing about this, Juliana?
Good morning, Laddie. Yeah, a pretty surprising announcement that broke overnight in Europe about Disney laying off 3.6% of its workforce, 7,000 jobs. And this is all part of a wider restructuring of the company, which is over 100 years old. But in the past year or so, it's been struggling, as have a lot of firms that did well during the pandemic, because, of course, consumer habits did change. We were spending a lot more time streaming and using online services, and that has completely changed. And Bob Iger, the CEO, has said that he wants to bring Disney back to where it started, which is all about the creativity. You remember, Laddie, that Bob Iger, after 15 years at the helm, announced that he was leaving the firm in 2020, but was quite hastily reinstated in November last year because of the fall in sales. And I think for Disney, it's the Disney Plus service that's really causing significant headache, along with the announcement of these 7,000 jobs that are going. They also announced that for the first time since it was launched 3 years ago, Disney Plus lost about $1.5 billion in its latest quarter, and that is pretty much reflective of the market, because we've seen a drop in numbers from other streaming services such as Netflix and Amazon Plus. They are quite confident, however, which is why we did see their share price rise by about 5% overnight in New York, and that's because there are two really big films coming out in the next few months, one of them being Frozen. I don't know if you've heard of that film before, Laddie. Another one being Toy Story. They are going to be sequels, and of course we know anybody that has children knows how much these films are loved. And I think Disney bosses are hoping with this $5.5 billion restructuring and the fact that they're going to be launching 2 new films, they're hoping that the Disney Plus streaming service will once again be profitable.
All right, it's a developing story. We'll definitely keep tracking that one. But another big one now for, Call of Duty fans. That big takeover by Microsoft or Activision. I hear the UK watchdog, they're one step closer to stopping that deal. What's that step at this point?
Well, the step is they're not really happy with this proposed takeover, which was announced in January last year. Microsoft, obviously pretty well known in the tech scene, but also doing pretty well in the gaming scene too. They have, of course, Xbox, and they own a large share of cloud gaming services. Now, they did announce that they wanted to purchase Activision Blizzard, who are the owners of Call of Duty, for about $69 billion. But the concerns from the Competition and Markets Authority in the UK is that it is going to have a negative impact on the 3.5 million gamers in the UK. And that's because we know we're going through a cost of living. And I believe lots of people use the cloud gaming service. If Microsoft have the cloud gaming service and they're the owners of what is billed to be the world's most popular game, then perhaps they're just way too powerful. So they have put out a set of suggestions for Microsoft, one of them being if they do acquire Activision, then they should sell Call of Duty. Obviously, Microsoft are not going to do that. That's one of the main reasons why they bought Activision, because it is the owner of the world's most popular game. But let's just see. Obviously, Call of Duty, the CMA doesn't have complete autonomy. It still has to wait to hear what its counterparts have to say in the EU and the US. But it's been over a year. The tech layoffs this year so far have reached 90,000. Can Microsoft wait to hear more from competition regulators or pull out? We'll just have to wait and see.
Right, and it's been a while I played Call of Duty. Well, we'll see how all of that plays out. Thank you so much, Juliana.
Thank you.
That was Juliana giving us the details with what's happening with that big acquisition. But let's move on now to other markets. Now we see Bitcoin, they're having quite a pullback yesterday, and but the sentiment in the market is still greed at this point, 55 points. That's what we're seeing for the Fear Greed Index, showing how investors feel in the market right now. It's lesser than what we had yesterday. Let's look at the market cap. We're seeing that's also impacted. It's down 2.14%. Profit taking we're seeing in the market at this point. Volume traded, that's $65.25 billion, up 6.92%. And we see Bitcoin dominance sitting at 41.29%, still having that range, failing to break that 23,500 resistance zone. Let's look at the price of Bitcoin this morning, $22,691. Down 2.27%. We see volume traded, that's $29.29 billion. Let's look at Ethereum. That's not too far away from 1.6. Still holding that 1,600 level quite well, down 2.62%. We see volume traded, $8.69 billion. Let's look at the top alts by market cap. It's all red. Biggest downer there, Cardano, 38 cents, down 3.15%. So we're seeing huge volatility in the market. Friday, obviously, that's known for more volatility, so we'll see how that plays out. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Good morning.
Good morning, Laddie. Good morning.
Great to have you, Rume. I'm sure you have a lot of cash where you are, because you sound really excited.
Laddie, you can say that again, but we're actually going cashless this time.
Oh, cashless, yeah. I've been cashless for a while, but, obviously we know how this impacts, those other people there. But we have that report showing that Lagos is among cities with the most people working in crypto-based jobs. So they're working remotely here for most of these crypto companies. How are you seeing this?
Laddie, I must tell you for a fact that, in fact, this news is it's a very sweet one. It's a very fantastic one. Lagos is indeed the center of excellence. According to the study by a company called Recap, it's a crypto asset management firm, did a research. Lagos ranks 20 crypto cities in the world. Beside Lagos, you have countries like Angola with the city, Luanda, Then we also have in that list, aside that the spot of 20, we have Ibadan as a city. Then 3 other cities in South Africa, Cape Town, Johannesburg, and Pretoria. Lagos is also the only city in Africa in the top 20 crypto cities in the world, with a total of 261.2 points. There's something I love about this analysis. The study also shows that the city has one of the lowest figures for crypto events and also crypto automated teller machines. It also has the highest crypto holders per the population size, that's 45%. Then also, the data shows that Lagos ranks among the city with the highest number of individuals working in crypto-based jobs. So, for example, London, the UK is also priding itself to be the top crypto countries in the world. London there, Dubai is heavy, New York City, Singapore, Los Angeles, Paris. Then you have Lagos, which makes a lot of sense for me. And also, the city of Ibadan is 24th in the crypto city globally and second in Africa. With
but Rume,
0.8 points. Yeah.
Rume, I'm wondering, how are they paid?
These people are being paid with digital assets. They are paid in crypto, obviously.
Okay. So when they get paid in crypto, what happens next?
No, they decide to pay. When they get paid in crypto, I don't know what they use their crypto to do.
Do they liquidate to Naira, or what do they do with the?
No, it's a digital value, right? So they might decide to do anything with it. They might decide to save it for the future, since crypto is not a means of legal tender in Nigeria.
All right, that's quite interesting. So that means we're getting some kind of foreign currency at this point with these employment.
So I see it as a communication of value that positions Nigeria as a place for people to go in the future to invest, rather than those negative sentiments out there in the past. It only shows that there's something really different about technology and those in Lagos and the other city, Ibadan, that is being mentioned in this statistic. So it will attract a lot of value going forward, and it's going to also help our GDP. And we have a lot of people that actually need this job. So what they actually need is just the skill, so that they can further improve on the society.
Right, because I guess if they were paid in US dollar, then obviously that would, translate to our reserves. But that's okay. Thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you very much, Ladi.
All right, now let's look at the top gainers counter now. Let's see, seeing RPL there, topping the counter at 9.93%. So we're seeing single-digit gains this morning with the pullback we're seeing in the market. Let's look at the top losers. Now let's see who's topping the losers counter. We're seeing big moves down, double-digit losses. The AI projects there having some big pullbacks there, 18.98%. Even though AGIX has had a big run with the whole AI propaganda going on right now. SAM, that's up, down 12.97%. Optimism, 10.95%. All these have had big runs from January till now. So we're seeing big pullbacks with the big runs that they've had. So that's how the market is looking today. A lot of volatility right now. That's a wrap on the market and a wrap on the program today. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch all of this again on our YouTube channel. Flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Enjoy your day.